go live now to our business reporter, Ed Boyd. Ed, good to see you. The Reserve Bank, all of a sudden, looking to cut rates.
That's right. There's pretty much a 90% chance the Reserve Bank will cut interest rates tomorrow. Just going back to Friday, it was only 15% chance, and it's really skyrocketed over the last couple of days due to Chinese manufacturing numbers really basically dropping off a cliff. Factories in China have come to a standstill, and people are obviously concerned, and they're worried about the economy and what's going to happen. So the Reserve Bank is pretty much almost locked in to cut interest rates tomorrow at 25 basis points, which will bring the cash rate down to 0.5%, which is the lowest we'll have ever seen it.
Yeah, and there's not much room for ammunition there that's left, is there? And especially if the banks don't pass any of that on, it kind of defeats the purpose, right?
Look, I think this time around the banks will pass on, they might not pass on the full 25 basis points, but I'm going to say they'll probably pass on at least 22 to help really get people spending a bit more money in the economy.
Absolutely. Ed, why is the Reserve Bank cutting? Because we know they don't have too many levers to pull on. And the coronavirus is going to be temporary, you'd hope. So why aren't they looking through this crisis?
Look, they're taking a sort of long-term view at how the economy's tracked over the last couple of years, and it has been soft. And I think they've realised we need to do a little bit more to help stimulate the general Australian economy. It is tracking softly. It does need further cuts.
Won't this go back to the argument that the RBA has been running for so long, almost begging the federal government to do more in terms of its stimulatory effect? You have Mathias Cormann, as late as last night, arriving in Canberra, saying there's not going to be an economy-wide stimulus package. There will be targeted stimulus for, coronavirus-affected industries. But if this goes for much longer, there might well need to be a economy-wide stimulus, won't there?
Well, look, I think that's true. I've been speaking to some economists over the last sort of week about this, and a lot of them are now saying we do need a nationwide stimulus. We need a national stimulus to help boost growth again. Of course, on Wednesday, we've then got the GDP numbers for the December quarter coming out. They're expected to be affected a bit by the bushfires, as you know, they were obviously very bad for the economy. But the key GDP growth will be the March quarter, which won't come out for another 3 months.
Yeah.
But that's when we're really going to see the impact of the virus and what it's having on Aussie business. And maybe then, when those numbers come out, the government might say, hey, this has been a lot worse than we thought. We need to inject some money into the economy. We need to put forward a stimulus here.
Well, I mean, I guess there's some expectation that will be a negative quarter.
Yeah, it is.
And the government's sort of, I think, perhaps almost ready for that by watering down its language lately, especially when it comes to budget surplus.
Yeah, it's looking like we won't be having a budget surplus anymore. I think the government's realised this is a very serious economic event, and let's just forget that messaging altogether.
Well, not completely yet. I mean, I think there's some wiggle room still, but not by much. Yeah.
Oh, you're very optimistic.
Yeah. I think still, but that could go very quickly, especially if there's no vaccine for this virus, and it looks like there's not going to be, at least for the next 6-7 months leading into the Olympics and what have you. But I mean, and that in itself would have an impact with the Olympics.
Yeah, it would.
Especially in Japan, anyway.
Yeah. Well, you're right, though. There's always a lot of expectation management. That it's a Costello school of thought when it comes to delivering a budget, but it's going to be pretty tough, I think.
Definitely.
Good to see you.
Thanks very much.